Good morning, good afternoon, good evening, everyone, wherever you are from. Welcome to the show, Understanding How China Approaches Businesses and Partnership. I'll start off with a simple question, and I want you to answer just in a chat group. Has your business come into contact with a Chinese company in the last 12 months? A meeting, a supplier, or a competitor? Which suddenly you notice that entering your space. Just type a yes or no inside the chat group. Okay. I'm willing to bet that almost every response is yes. And if for those who say no, within the next 12 months, your answer will definitely change to a yes. This is not a prediction from me. This is actually the reality. So what I'm going to share with you over the next 1 hour is not reports or research. It's actually from rooms where I have actually been in. Negotiations I've watched succeeded or failed. Dinners that lasted from 5 p.m. in the afternoon up to midnight. That's where the real decisions actually made. So I normally do this in a 5-hour masterclass, but for the purpose of this talk, I've condensed the information for executives here, and I'll try to present them within an hour. So today, after this session, you'll leave with a genuine understanding of how Chinese companies think and operate. You have a specific and practical tools you can use the next time you meet up with Chinese companies. So let's start off with what is really matters now. Okay, just a quick context on me. My name is Thomas Hoon again. I'm a Singaporean who is based in Guangzhou, China for the past 13 years. I have 26 years in sales and business development, and I've worked for MNCs across the globe. I've worked for the Americans, UK, Finland, Netherlands, Israel, Korea, Japanese. So the common thread of my role is always I've been a person who is connecting two worlds, whether to east or west or the global south to the east. Personally, I also hold a government appointment as a culture and tourism ambassador for Nansha district in Guangzhou. That means that I have governmental access to relationships, deal flow, and inside knowledge which most foreign companies spend years trying to build. As a startup mentor in a government-owned incubation base in Guangzhou, I've also sat across Chinese founders, SOE executives, and government officials at every level. So I watched deals worth 10 millions collapse because someone said the wrong word or missed a signal. And I watched deals close within 3 weeks because the very person who went into that meeting understand exactly how the Chinese rule book plays. And personally, I also scaled 5 startups across Singapore, Korea, Vietnam, China, and Thailand. So that's what I am to share. My experience, not theory, not something you read in a textbook, but what I've actually seen on the ground. So without further ado, why this matters now? Chinese companies are entering every sector. They are moving very fast. They're into F&B chains, EV, e-commerce, consumer tech, fintech. I want to tell you something which I saw in Ho Chi Minh City, and I couldn't stop thinking about it. I was walking down a street in Ho Chi Minh City with a business contact in. So on one street, that particular street is about 1 kilometers long with shop house on the left and right. There were four Mi Xie stores. For the benefit of those who doesn't know who Mi Xie is, basically Mi Xie is a Chinese bubble tea store. So there were 4 along the same street. And each of these store sells ice cream at 20 US cents. So my contact was saying, oh, they appear in the last 18 months. So if the Chinese wave hasn't hit you yet, it's going to hit you very soon because this is not a food story. This is a market entry story. And by the time you notice it, The ecosystem is really being built. So we are now in phase 3 of China's global expansion. Phase 1, manufacturing exports. A lot of cheap mass market goods, low quality goods selling for very cheap prices. That's phase 1. Phase 2, Belt and Road Initiative. So Chinese government go out to the rest of the world to build infrastructures. Now we are at phase 3. Phase 3 is where private companies go into your markets with their capital, playbooks, and full ecosystem. Take a look at BYD. They overtook Tesla globally in EV sales, not just in China, but globally. Mixue has more outlets globally than McDonald's. And Chinese fintech platforms has more transactions in Asia than most local banks. So the question for every CEO and executive on this call, my question to you is, do you understand how they think? Do you understand how trust is built with them? How do they structure deals? And how do they build market share in your sector? Next, we look at the environment that shaped Chinese behavior. I want to take you to a city that most of you never been to. This picture is taken from Yiwu, Zhejiang. It hosts the world's largest wholesale market, 75,000 shops across 5.5 million square meters. And every shop besides each other almost sell a similar thing. So if you multiply that number with 1.4 billion people, add logistics that can deliver anywhere in China in 24 hours, add a regulatory environment that can restructure an entire industry overnight. This is the market in which every Chinese entrepreneur goes through. So why is speed, scale, adaptability a trait of a Chinese company? Let me bring you an example. In 2018, Pinduoduo, which is an equivalent of Groupon, went from 100 million to 300 million users just in the span of 12 months. So the founder ran it like a military campaign. Decisions made in hours, deployments in days. And when your Chinese counterparts push for decisions that feel uncomfortable, it's actually normalcy to them, because to them, hesitation is losing. That's why if you deal with Chinese partners, they move very fast. Scale. If you have 100 customers in China, you have no leverage. How many of you has done business in China before? Or at least buying and sourcing in China? So typically, when you do business with them, they'll ask for what's your MOQ, minimum order quantity. By asking you that question, in their mind, they already know what sort of buyer you are, what is your status, what's your financial muscles. So scale is always an important factor in the Chinese business. If you have 10,000, you set the terms. That's how you leverage. So the next time you want to buy from China, consolidate your orders and buy and negotiate as one entity rather than buy individually. Adapt. I have known Chinese founders who have ran three businesses under a single entity in 5 years. Each time the market shift, they change and they pivot. That's how Chinese companies are. No sentiment in what they have built before. And when the Chinese companies come to you midway and say they want to renegotiate a term, which is part of your contract, but they still want to negotiate, it's actually adaptation in progress. They are not doing this because of bad faith, because the market demands them to do it. So that's how Chinese companies behave. So before you deal with Chinese companies, you must know whether they are SOE or private. So what is SOE? SOE is state-owned enterprise, private companies. I always like to share this story. A senior executive, very accomplished, well-connected, travels to China and receives a party from a Chinese delegation, similar to what Donald Trump is receiving when he was visiting China just a month ago. Professional reception, everyone is enthusiastic, conversation flows. There's talk of full partnership, investments, long-term collaborations. So the feel-good factor is there. So the executive went home and went to the board and said, boss, we have a great Chinese partner. We're going to close this deal in the next 1 month. But what happened is 3 months later, nothing has happened. 6 months later, still waiting for NDA to be signed. 6 months. And 1 year later, the relationship is dead. So the most common reason is that particular executive never understood who are they dealing with, whether is it a state-owned enterprise or a private company, because the rules of engagement is totally very different. So who are the state-owned enterprise? CRCC, China Railway Construction Corporation. They build railways all over the world. CITIC, excuse me, they build offices and industrial zones all across ASEAN. So these companies have access to capital that no private firm can match, mandates that can run 10 to 20 years. So what this tell you? SOEs are slow, they are structurally slow, and they are deliberately slow. The person they are meeting, the regional director, the country manager, might be genuinely enthusiastic, but they cannot make the decisions. The decision is probably 3 or 4 levels up in a community sitting in Beijing. So if you meet them in somewhere in Barcelona or London, they might be saying, oh, fantastic, let's work together. But their words count for nothing if they do not have agreement in Beijing. So if you are pursuing an SOE partnership, your relationship needs to be equivalent of a deputy minister level, or else it won't be working. And one of the things that you need to take note is, you also need to align to the national policy or priority that they're operating under. So you need to be brief to your board that this is not going to be a short win, but long-term investments. On the other hand, private companies operate differently. DJI, Xiaomi, ByteDance, Pinduoduo, founder-led, fast, entrepreneurial. The decision maker often make the decision within the room. So I've seen Chinese private companies go from the first meeting to sign an agreement just in 2 to 3 weeks because the decision maker is there. So when you are evaluating a private company as a partner, your first due diligence question you should ask is, what is their domestic regulatory position? What sector they are in? And is that sector currently favored by the Chinese government? The next question you ask, are they entering your market because they see a genuine opportunity? Or they are entering a market because of deteriorating situation in their country, so they are redirecting their capital elsewhere? Both types exist, but the due diligence is how it makes your strategy different. So what is Guanxi? I think most of you will probably hear this before. If you only want to remember one thing from my presentation today, remember this word, Guanxi. Because Guanxi is the operating system that Chinese business runs on. Not a custom you can acknowledge or move past. And if you don't understand, you'll miss every opportunity to have a serious interaction with your customers. Let me tell you a story, what happened to me in 2015 when I go to China. So I've been trying to meet a particular factory owner in Guangzhou for 3 weeks. He was a significant player in this sector. I was in the mobile phone sector, so I installed software into into mobile phones before they actually exported to the rest of the world. So this is the kind of person who can open doors I couldn't open myself. I was lucky, a mutual contact finally got me an introduction. So we met for dinner, 7 o'clock in the evening. We talked, and by midnight, we are still there, 7 o'clock to midnight, 5 hours. And in these 5 hours, we talked nothing about business. He was asking, how's my children? How's my wife? How's my parents? Then he talked about his childhood in his province. He talked about his parents, the farmer's parents. He talked about how he borrowed money at the age of 28 to build his first factory. Then he was telling me his daughter is studying engineering in US. Everything. His favorite food in Singapore is chicken rice. And business part, after 12 midnight, he said, oh, Thomas, I need to go home. And before he go home, he pat me on my back and say, Thomas, I'll get back to you after I make a few calls. So I was thinking, what is this? I spent 5 hours with this guy, and all I get a commitment from him is I get back to you after I make a few calls. But well, true to his words, within 1 month later, that particular man introduced me to 3 of his partners. And 2 of the introduction became actual deals. And one of them is still active today, which is 10 years into running. And the dinner was the meeting. I just didn't understand while it was happening. This means that so the next time when a Chinese counterpart invite you to a 4-hour dinner where business is barely discussed, that's not inefficiency. It's actually the deal being constructed. Every food share, every drinks you have, every question they ask about you and your family, they are trying to evaluate what sort of person you are, what sort of values you bring to the table before they go into the business with you. And two practical things you need to remember. Guanxi is not a one-way direction. You need to reciprocate. Guanxi is on mutual obligation. When someone does something for you, they expect you to return the favor over time. Not immediately, not transactionally, but they expect it. And the mistake is refusing to participate. So if you ever receive a favor and don't acknowledge or return it, you are likely to have broken a relationship with your Chinese partners and you won't get a second chance. Secondly, it doesn't transfer. So if your Chinese partner introduced you to the government official, or my Chinese partner introduced me to the factory owner, that relationship belongs to my Chinese partner. I'm just a guest at the table. So whenever I do any negotiations, always go through that intermediary until the intermediary actually say it's okay to go direct, or else your relationship will be damaged as well. So if you are going to China, build your own guanxi because this takes time, takes investment, but it's all yours. I hope everybody is following me. Give me a thumbs up or comments if you're not following. I'll try to slow down. Okay, good. I saw some thumbs up. Excellent. So next, 面子. So what is 面子? Another Chinese word. So 面子 is basically face, status, and there's a concept. In every culture, there's a concept of face we know. But in a Chinese culture, 面子 is a structural force. What do I mean by that? It determines who speaks first in the meeting, how disagreements get communicated, whether a deal survives a difficult moment, who gets to sit where in the dinner table, who gets to pay for the dinner, who gets to toast and say something. This is very intricate. There's lots of details inside it, but I wouldn't share on this talk, but I'm happy to share them if any of you come to me with questions on that. Okay. So 面子 is very important because it actually impacts how a deal survives in the difficult moment. I'm going to share another story for you. A senior executive from Southeast Asia, who I was accompanying, was negotiating a supply agreement with a Chinese manufacturer in Guangzhou. So they've been through the pricing twice. And the CEO actually saying, can we go through the pricing again? This is the moment where the ASEAN executive got frustrated and probably lost his temper. In front of both delegations, he actually turned to the Chinese CEO and said, your numbers still don't work. We have been over this over and over again. What exactly is your problem? Of course, sensing something wrong, I tried to diffuse the situation, and the CEO just smiled, nodded. So everybody presumed everything is okay. And the CEO, after 2 minutes, spoken something to the GM over there and left the room. But the meeting continued. There were handshakes at the end. And what happened 3 days later? 3 days later, the Chinese company stopped responding to emails. No formal rejections, no explanation, and the relationship simply went silent. So, what happened in this particular story? The executive has caused the Chinese CEO to lose face publicly in front of his own team. Of course, the executive might be factually correct about the scenario of pricing, but it didn't really matter. The damage to the relationship was already done. This is not an argument. And in Chinese business culture, this kind of public embarrassment is often unrecoverable. There's nothing I could do to help him. So giving face costs you nothing, but it builds enormous goodwill. The deal might be worth us several millions a year, and things can go quickly wrong with just one direct sentence in the wrong context. So be careful when you're dealing with Chinese counterparts or if anybody else. The next thing, yes is not always yes. This is very typical of a Chinese businessman. They don't really say no directly to you in a business context because they don't want to lose face and they don't want to cause you to lose face. So no is no most never stated. Instead, you'll hear things like, um, this is a very interesting proposal. We'll need to study it further. Okay, that often means no. The timing may be difficult for us at the present. Okay, that's another no. Let us discuss this further at our next meeting. But after the meeting, they didn't schedule the next meeting. It's an obvious no. So warm handshake, 2 weeks of silence, that's a no. So this is a skill you need to develop and you need to read the room correctly. And when you put yourself in a position when to say no to them, you also never say no to them. Perhaps you can say something like, the timing isn't right for us currently, but we value keeping the relationship. Perhaps what I could do is to send you information to keep you updated of what we are doing. So in that way, the relationship survives and the deal possibility still stays open in the near future, hopefully. So Chinese enterprise think in ecosystems, not companies. The goal of the Chinese entrepreneur isn't to build a business, but is to build a network. This is fundamentally different from what we have brought up to. Build a business, earn enough money, profit margin, makes enough volume with the ROI. That's how they. But in the Chinese context, they are different. So today, if I'm going to ask you, if you own a restaurant and it's going well, what would you like to do next? You can put your answers in the chat group. Okay. So from a Chinese entrepreneur perspective, they'll ask something very different. They'll ask, how do I become the supplier to every restaurant in this category? That shift from building a company to building a system is the central logic of how most of the successful Chinese business operates. WeChat didn't build a messaging app. They built an operating system of Chinese daily life. So today, WeChat processes more daily transactions than Visa and MasterCard combined. Messaging, grocery payments, doctor appointments, taxi bookings, government services, all you name it, all inside within the app. Is it high tech? No, the genius isn't in the technology. It's about the switching costs. Once the ecosystem reaches a critical mass, leaving WeChat means leaving your entire digital life behind. So ask yourself, is the system they are building in your market? Is it a system in which they are building in your market? And in 5 years' time, what is your position? Will you be stronger or weaker working with them? This is something in which all businessmen need to answer when Chinese companies go into your market. Well, I like to drink bubble tea. That's why I keep using this 蜜雪 example. So I'm not sure how many of you have seen this before, but they are famous for their bright red branding and ice cream for just 20 cents. So the first thought as a businessman, even I have that thought when I first see their business model. How do they make money at those prices? They must be burning cash. Actually, that analysis isn't wrong, but understanding why they do it reveals one of the most important things about Chinese business strategy. 蜜雪 doesn't earn primarily from selling drinks to customers. 蜜雪 earns by selling to its franchisees. So every one of the 48,000 franchise operators must buy ingredients from 蜜雪 own supply chain. So the equipment to make the bubble tea, the equipment to wrap the bubble tea after it's finished making, the store design, signage, packaging, straws, everything is from 蜜雪. There's no third-party supplier. And the franchisee pays to operate under the 蜜雪 brand. And in exchange, they become a captive customer of 蜜雪 entire supply chain. The franchisee is secondary. So the real revenue is being the exclusive supplier to 48,000 businesses. The 120 cents is not a weapon, it's not a loss, but it's low enough price to generate attention, enormous volume, and it justifies centralized manufacturing. And this is something in which other competitors can't compete once you have the critical mass. So this is how Chinese companies compete. And my question to all of you is, what does your company do when the partner that you are dealing with, what actually do they control in the system? Number one. Number two, what does the ecosystem looks like in 5 years' time in the business that you're in, especially with Chinese presence? And number three, the next time you see an impossible pricing, don't think about the losses that they're making. Look beyond the business model and see what's the real business model underneath. Next slide, Western strategy versus Chinese strategy. This is not a slide to talk about who is better than who. And this is not a slide to talk who is universally right, because each strategy reflects the environment they are in. So we tend to look at Chinese business strategy and judge it against Western framework. But let me walk through the table and draw attention to the roles that matters most. First of all, time horizon. This is perhaps the most fundamentally differences. I've worked with Chinese founders who were genuinely comfortable with 5 to 8 years of losses before expecting profitability. Because they have a vision, they understood that owning that market made the eventual margin inevitable. Meituan, the food delivery platform, just like Uber, lost money for 6 consecutive years. And when profitability came in, it came at a scale in which the competitors couldn't compete. For a Western CEO, they are always under pressure to deliver quarterly earnings. So it's fundamentally a different game. Chinese businesses play the long game. So when you are in partnership negotiation with any Chinese companies, their proposal seems to sacrifice near-term economics for position because this is their logic and it's a different time horizon than us. Next, relationship to contract. Western businesses, contract defines all relationship. We like to say there's nothing personal, it's all business. But the Chinese, they are different. Relationship defines the contract. The contract formalizes what relationship that has already been established. And if the relationship is strong, the contract can adapt when circumstances changes. And if the relationship is weak, no amount of legal protection will make the partnership work. This means that when a Chinese partner wants to renegotiate terms you have considered settled, don't take it in a bad way. They are not violating the agreement. They are just signaling the circumstances have changed and relationship needs to be adapted. So how you respond to that moment will determine if that partnership continues. And the bottom line to this table is you don't need to look Chinese, you don't need to think Chinese, you don't need to adapt Chinese strategy to work effectively with Chinese companies. But you need to understand it so that you will stop misreading signals. Okay, the next slide, challenges facing Chinese enterprise. The pressures at home now and how they are partnering the ASEAN market or even international market. This is a slide I wish more executives have seen before they sign up their internships. Because not every Chinese company approaching you with partnership proposal is a champion at home, obviously. Some of them are running away from problems they haven't solved at home. And the differences matters how you structure the partnership, what protection you need, and what your realistic expectations should be. So, economic transition. China is attempting one of the history's most complex economic pivots. Moving 17 trillion economy from manufacturing, export-driven, to an innovation-driven domestic consumption growth. What does this mean? This means that companies that thrive in the old model, cheap exports, volume OEM manufacturing, are under real pressure to move up the value chain. So some of these are doing brilliantly. Huawei is building 5G globally. DJI is dominating the drone market. BYD is leading an EV transition. But there are many others who are struggling too. So ASEAN is either an attractive market as a genuine expansion opportunity, or is just a relief valve for contracting domestic business. The due diligence question you need to ask about their domestic China revenue trend for the last 3 years. A company whose China business is growing, entering your market, is very different partner from a company whose Chinese China business is contracting and needs new revenue. That's very important. Of course, geopolitical pressure. The supply chain decoupling pressure is very real. The push by Western companies and governments to reduce dependence on Chinese manufacturing. This actually creates a genuine opportunity for ASEAN. So Chinese companies are now building manufacturing presence in Vietnam, Malaysia, Thailand, Indonesia, just to diversify their political risk. And that's a legitimate reason for them to be in your market because they need geography, they need regulatory access, and they need a market neutrality that a China-only supply chain no longer provides. So understand what they need from you specifically because it knows what you're offering, your neutral access, your relationships. You can price that contribution correctly in that partnership if they ever come to you. Domestic regulation. In 2021, in the space of 18 months, Chinese government issued regulatory actions that restructured the entire technology platform sector. TT was put from app stores after its IPO. Alibaba was fined 2.8 billion. And New Oriental, which is an education company, which is listed as well, lost 90% of its stock values just in weeks. So the message to every private company was very unambiguous. No matter how large you become, you still operate within the boundaries of government policies. And these priorities can change rapidly. So some of these Chinese companies which is active in ASEAN now, well, of course, they are here to build their revenue, but they are also trying to build assets outside the reach of domestic regulatory uncertainty. This doesn't call for a red flag, but it changes how you treat the partnership. Okay. So what are we looking at in the next 10 years? All right. First, AI and deep tech. Chinese investment in AI is driven by necessity. So when US imposed export control on advanced semiconductors, particularly NVIDIA power chips, China faced a fundamental question. How do you build AI capabilities without the best hardware, best chip? So they found an answer. Invest massively in domestic alternatives and invest in software and algorithms that perform efficiently on less powerful hardware. And the end result is a robust AI development ecosystem, largely decoupled from US technology. You take a look at some of the tech Chinese companies which is coming up. Baidu, Ernest, Alibaba, QN, and dozens of well-funded startups producing models and application at a pace that was hugely underestimated in the West until recently. And what does this mean to you and me? We are seeing more AI-powered products and services from Chinese companies, whether is it in logistics, in healthcare, in financial. They'll arrive in the market soon at competitive prices, backed by years of iteration and data sets that most of the world cannot match. Oops, sorry. Next, EV and green transition. BYD has already overtaken Tesla globally in total EV sales. But BYD is not the story. The story is actually the ecosystem that BYD represents, CATL, the world's largest battery manufacturer, and it's Chinese. So the charging infrastructure, battery recycling, energy storage systems, everything is Chinese owned. So when BYD opens in our market, they are not just selling cars, they are selling the entire ecosystem. So companies that understands this and position within yourself within it will have access and advantage that reactive competitors won't. So the era of opportunistic Chinese market entry flooding the market is ending. The next wave will be more sophisticated, more selective, more interested in genuine local partners who understand both markets. That's what they're looking for. And this creates an opportunity that didn't exist 5 years ago. If you have genuine capability on both sides of this corridor, market knowledge, relationships, regulatory understanding, cultural fluency, this combination is what a Chinese partner is looking for. And this will become more valuable when the partnership becomes more sophisticated. And the question is whether you are investing in building that capability now. Bring that back. My last slide. Key takeaways. What changes on a Monday morning? So I've gone through just now. Who are we actually dealing with? Are we dealing with a SOE or a private company? Have I built the relationship, not just in term sheet? Because a strong relationship gives you flexibility when the market changes. Invest in dinners, invest in relationships if you are in the China market, because it brings a better commercial outcome. Are you reading the signals correctly? Always develop the discipline to read what isn't being said, because the vocabulary is different. And once you learn it, the communication is actually very clear. Also, look beyond the product and service they are proposing. What ecosystem they are constructing in your market? And in the system they are building, do you have a role to play? Or are you just a temporary mechanism which gets replaced after they are established? Know which one you are in before you sign. And last but not least, am I protecting face, Dell's and mine? In every difficult moment in a China partnership, there will be difficult moments. And they will always come back to this question. So deals renegotiated survives. Partners humiliated, however, doesn't return. So we must remember this. The Chinese economic value will be created over in the next 1 to 2 decades, and it will be significantly more than any parts of the region. So the executives here today who is able to capture the value, understand it, will benefit from this wave. That's what I have for you today. And if you want to ask me more questions, do follow me on LinkedIn, because I do write daily on LinkedIn about China, about their technology, about their mindset. And that's a QR code you can scan if you want to connect with me. I'll keep this slide on for a few minutes while I look at the chat. Okay, the next session is a Q&A session. I have some questions which came to me before the show, so I'll try to answer them. And I also take some questions in which I've seen in the chat group. Okay, let me just look at. So one of the questions asked by one of my friend, they were asking is, how do I find the right Chinese partners? So in my personal opinion, the most reliable route is through existing trusted relations. People who already have the guanxi with the counterpart you're trying to reach out. I can tell you that your core direct message to Chinese contacts almost never works. This is not how business is done in China. Business in China is always about relationship. So work through industry associations, work through government trade bodies, trusted intermediaries, or if you trust me, you can walk through me too. But my focus is in Greater Bay Area. And Greater Bay Area is in the map where it's inside my background. The Guangdong province plus Hong Kong and Macau. The next question is, how do I know if a Chinese partner is trustworthy? Just like any relationship, whether it's a personal relationship or business relationship, is demonstrated over time. So take an opportunity to ask others who have worked with your potential partners, specifically people outside the Chinese network. Never ask a Chinese about another Chinese. They always tell good things. So ask somebody else who have dealt with them, because the Chinese business community is very small, even though China is very big, and reputation travels very fast. Okay, let me see some of the questions. Okay, thank you. I will know about partnerships. Excellent call. Thank you very much. Long-term trading contracts. Okay, I would like to answer this question. Asked by Akansha. A business strategy is that it is relationship-led and long-term oriented, treating contracts as evolving frameworks while using low-cost, cross-sector scale to build ecosystem. So with the above business strategy, how flexible contracting used? To be honest, when I deal with the Chinese, when I first went into the Chinese market, because I was working for a Western company, so I keep insisting on signing a contract, signing a contract. But you realize that contract doesn't really move them. They probably need some sort of assurance or signals from the top before before you before they start working on a project. That's how the Chinese are. So when you go into the Chinese market, focus on that relationship. Don't focus on, of course, contract is important, but focus on building that relationship. Because at the end of the day, that relationship matters more. Okay, let me see some of the other questions. Ashim Gupta asked this question on time horizon. Understand that Chinese private companies think long term, but don't the listed companies face the quarterly? Yes, when they go public, the pressure is totally different. So you realize there's a lot of companies who is very big but doesn't want to go public because they do not want to go through those kind of pressures, trouble reporting to shareholders. And Huawei is not even a listed company, it's a private company, despite the size, particularly for this reason. Okay, let me just take one last question. Okay, not many other questions I can answer. Let me scroll towards the end. How to choose Chinese partner to sell a market specialized software? Are you referring to selling into China or taking Chinese software out to sell to the rest of the world? Okay, selling into China. Unless you have something special, which is patented, it's very difficult for Chinese companies to accept your software, especially given the current geopolitical climate, because Chinese government has specifically indicated that grow domestically. So if you really want to sell into China, first you need to set an office there, and you need to partner with Chinese companies to localize your software. Or else it'll be extremely difficult for you to go into the Chinese market. That's my personal opinion. And I've seen a lot of companies trying to sell software into China failed because of this. Okay, I think that's the end of it. I'm happy to take any other questions offline, and just feel free to connect to me on LinkedIn. I'll answer whatever questions that you have. Victoria, you have two questions for me. Perhaps we can take that offline. Hope everybody has a great session. And yes, for those who want to visit me in Guangzhou, I'm currently traveling, but I'll be back to China end of July up to August. So if you ever want to come to Guangzhou to look at the incubation base, to look at the business environment, feel free to reach out to me. I'm happy to show you around. All right. Thanks, everybody.